This is the World Financial Report on Radio with Harold Siegel. My name is Randy Marshall. Joining us via the telephone, our financial and diamond expert, Harold Siegel. We're taping our show on July the 9th, 2015. Our time is 8:43 Mountain. Our radio show runs on 6:30 CHED in Edmonton, Sunday afternoon at 3. Don't forget, ever miss a radio show? They're streaming live, archived, on Harold's two websites, HESradio.com, rarecoloreddiamonds.com. And we have a podcast as well. I've listened to it many times through iTunes. And you can put the show on your portable device, and we go anywhere you do. All you have to do is type in the World Financial Report on Radio in iTunes, and you will find us, and you can subscribe to our podcast. The show will come in weekly for you. Well, here it is, Sunday, and today is another D-Day for Greece. Last Sunday, when we were doing the show, we were wondering, would it be a yes vote, a no vote? It ended up being a no vote. They had the finance minister of Greece resign. Now, here we are. They say today is the final day for Greece. Either there's a deal or they are out of the euro. That's what we're being told. Banks continue to be closed. Banks really are insolvent, and many of them will have to merge together if they do get a bailout. The voting at this point, the betting, it looks like they could leave the Eurozone, and we'll have to wait and see later today. In fact, one of the interesting stories, and we'll touch on it a little later in the show, we'll talk about bail-ins, and we saw that in Cyprus. They're talking about bail-ins for the banks in Greece. The Chinese stock market, well, it's basically a massive Ponzi scheme, let's face it. It was plunging, and then all of a sudden we had a good day on Thursday, but it's heavily manipulated. Ordinary Chinese investors, they bought on margin, they sold on panic, and the Chinese are trying to stabilize that marketplace. One thing that is doing very, very well, hard assets, including diamonds. And last week, we spoke about the Argyle Pink Tender. Our featured diamond of the week from rarecoloreddiamonds.com is a .76 carat, heart-cut, fancy intense pink Argyle. This is a stunning diamond. We'll talk about the Argyle Pink Tender later in the show, but Harold, rarecoloreddiamonds.com, featured diamond of the week, a .76 carat, hard-cut, fancy intense pink Argyle, an absolutely stunning diamond. And when you see basically the Chinese stock market plunging, you have Greece, will they be in the Eurozone or not? You have Puerto Rico bankrupt. It's a time where people are looking at assets like diamonds and seeing incredible strength.
And they should, because the conventional markets as we know them today are just not safe. They're heavily manipulated, and most people involved in the stock markets around the world right now are losing their money. Again, this was a crazy week, starting off obviously with China. You know, the Chinese stock market has plummeted. It's plummeted by 30% in just less than a month. So the fact is that the Chinese stock market is really not reflective of the Chinese economy. Because the fact is that the only reason that the Chinese stock market has reached the levels that it has is that they allowed the general public, the everyday man and woman, to now invest in stocks. In fact, they promote it. So what they did is with the huge Chinese population, they made the stock market available to regular investors, but then they also allowed them to leverage it, which was the kiss of death, actually, because they don't know anything about trading. And the fact is that everybody thought it was easy money. Just put your money into the market, leverage it as much as you possibly can, and sit back and make a fortune. Well, the fact is that there was, so few stocks on the Chinese stock market that all these investors were just buying everything that they could and bidding these prices up to ridiculous levels. I mean, levels that don't even that are incomprehensible. They just don't make any sense. So all of a sudden, when the market understood that and started to fall, well, again, what happens when the market starts to fall and your leverage is that you hit a margin call. And then you have to meet this margin call, and these people can't meet the margin calls. So they had to liquidate their positions that sent the market absolutely plummeting, and that's what caused the market to drop for 30 days basically in a row. Now what happened on Thursday was the Chinese market had its biggest up day ever. How does a market plummet as much as it did with all the negative news and everybody getting killed in the marketplace by leveraging their positions, and then all of a sudden things turn bullish? It didn't turn bullish. What happened is, and I can assure you this, they're not admitting to it, but the Chinese government and the banks ended up buying back these stocks, probably put billions and billions and billions of yen back into the marketplace to buy back these undervalued stocks to show that the market was coming back up again. But the damage is already done. Most of the investors that were in the Chinese stock market are wiped out. The fact is that if you don't understand leverage, leverage can work for you and leverage can work against you. And when everything is going your way and you're heavily leveraged and you're making money hand over fist, life is great. But when that market starts to turn, and most people don't understand what to do because they get emotional as opposed to logical. And primarily, when the market starts to fall and they got hit with margin calls, that means that they have to come up with additional money to support their position, or they get liquidated. And that's exactly what the case is, which caused the markets to fall even further on these mass liquidations. Then on a day like Thursday, the market skyrockets to one of the biggest up days that they've ever had, and it's not because the market is bullish. In actual fact, the market is so manipulated and so bearish that what they did during the week was that they suspended any of the major funds from selling out. So they restricted anybody selling any further positions. How illegal is that? That means that these hedge funds could not sell their positions even though the market was plummeting. And that was the way of the Chinese government to stop the market from falling at that point, the free fall in the market. But again, that's illegal. You cannot do that. So the fact is that in any marketplace, you've got speculators. You've got people that are going to bet that the market's going to go up, which was probably 95% of the marketplace. But then you've got the 5% that feel that the market is going to go down, the people that really understand the market, and they short the market, and they shorted it with substantial money. And when the markets were dropping, they were making fortunes. So in a free market situation, you should be able to place your bets and take your risk and see what the results are without the government stepping in and manipulating the market, because now the people that were short the market, and they were short for the right reason, ended up being in a bad position because, again, their position was halted because the market wasn't going to sell off any further. And then when the market skyrocketed on Thursday, I'm sure that was not a very favorable opportunity for the guys that were short the market. So again, what we have in the United States and in China is obviously two heavily manipulated stock markets. So again, what's happening in China, the funny thing is that I was being interviewed on Fox News last year, and I happened to mention that China was going to head into a recession, that their economy was nowhere near what people thought it would be, and Deidre Bolton at that point said that I was wrong, that there was nothing wrong with the Chinese economy. In fact, the Chinese economy is very strong and extremely bullish. So everybody has their own opinions. I've been trading these markets for 35 years, and I see things in the markets that other people don't see. In actual fact, I know a lot of the recommendations that I've been making lately are not popular, but they've turned out to be exactly true. The gold market is dropping, the silver market is dropping, the oil market is dropping, the Canadian dollar is down again, the U.S. dollar is strong. All those situations that are unpopular are very true. And the fact is that you have to look at the market and see what the market's going to give you, see what the trend is, because the trend is always your friend. And the fact is that the trend for gold at this particular point and silver is to go lower. And we had a substantial and very volatile week this week in gold, silver, stock markets, and everything all around the world based on what's happening in China and in Greece. Now, the surprising thing is that where the Dow did fall this week, one of the biggest, it dropped about 350 points in 2 days, but that was with Greece and China both at the same time. So what that tells me is that, again, the U.S. market is so manipulated, because the fact is that if the Chinese stock market is plummeting, the U.S. market and all other markets should have plummeted with it, not just 350 points. That's minuscule compared to what should have happened in the U.S. stock market. With Greece probably going to be kicked out of the Eurozone, the same situation. The stock market should have sold off substantially, and it didn't. So now that the Chinese market is back up, the Dow is up today as we're taping the show on Thursday. It's up 141 points. I anticipated that the Dow would have gone up, possibly 300 to 400 points today on Thursday and Friday, based on what's happening in China and Greece, because it didn't sell off anywhere near as much as it should. So again, stay away from leveraging your positions. It's all well and good when the markets are going your way and you're leveraged and you're making a ton of money. But when that market starts to turn and it starts to fall, and markets tend to fall a lot faster than they go up, that's where you're going to find how leverage can hurt you and take away not only the money that you invested, but you're going to have to come up with additional money, and for most people that's going to be problematic. The other situation is Greece. How would you like to be in Greece at this particular point? You can't get any money. Where they say you can take out 50 or 60 euros a day out of the ATMs, they're all empty. There's no money there. The banks have been closed for now 2 weeks in a row. Nobody can get any money. All the ATMs are gone. The banks are in huge trouble. What Randy mentioned before about bailouts and bail-ins is definitely going to happen. We saw it happen in Cyprus in 2011, that the banks got into so much trouble that the banks actually took the depositors' money and used that money in order to try to sustain the bank's business. And that's what's going to happen again in Greece. If this, on Sunday, we're taping the show on Thursday, but if it does not go Greece's way and Greece gets kicked out of the Eurozone, that's only the start of it. Because what's going to happen from that point on is that it'll be a domino effect. Italy, Spain, and Portugal will also follow suit. All the banks in the Eurozone are going to be in trouble, because all the banks tend to deal with each other. The people that are left, the smart money is all left Greece. They've all taken their money, they put it into other assets, hard assets like diamonds and gold and things that are substantial, not bonds. The bond market is a disaster. The bond market is going to be one of the biggest financial disasters we have ever seen, because it's tied into the derivatives market. So as all these countries and all these banks and all these stock markets and everything start to crumble, what's going to happen is that the derivatives market are going to crumble. And that's the thing that I'm most concerned about, because the derivatives market, a massive amount of it is held by 2 or 3 major U.S. banks. And the fact is that they're very heavily leveraged. They are also very much misunderstood, because a lot of financial people just don't understand how to get out of a derivative, but it's in the quadrillions of dollars and it's unregulated. That's the frightening thing. There's no regulation to these derivatives, and derivatives will get offset as interest rates go up or as financial catastrophes happen, like is happening in Europe at this point. So what I foresee is that Greece will be off the euro. Even if they do something on Sunday to save it, the writing's on the wall. Greece is done. All the major money is out of Greece. Greece is in big trouble. The banks are all in big trouble. It's just not coming back. But the fearful thing is what's going to happen with these other countries. Italy, Spain, and Portugal are the weakest of the next 3 weakest, and they could easily follow suit. It means that the good people of Greece will be back on the drachma, which will mean that they're going to lose about half to 3/4 of their net worth. It's a frightening situation. Now, as bad as the U.S. economy is, it's better than most other economies in the world. That's why the U.S. dollar has remained very strong. This week, it got up to 97 cents. I've been warning you about this, that the U.S. dollar is going to climb, and it's going to bring down the gold market temporarily. So I think that the U.S. dollar is going to top out at about 105. I believe the euro is going to fall below 105. So I believe that the U.S. dollar is actually going to be stronger than the euro within a very short period of time. Other situations are going to happen in the currency markets, and other things are going to happen in all financial markets as that we trade. So this is a time when you really have got to be concerned. Okay, the fact is you can either sit back and say, there's nothing I can do, I'm just a small investor. There are things you can do, and you should do it long before the you-know-what hits the fan. Just like the smart money in Greece left a long time ago. The people in Greece now that have not moved their money are the ones that are going to lose everything. We don't want to see that happen to any of our clients. We don't want you to be in markets and find out that you should have been out of that market, for quite a long time now and end up losing all your money. What you need to do at this point here is to be proactive. You need to look at the overall marketplace, and I'm certainly willing to help you. Again, I'm on the phones with clients all day long. I'm in Colorado for the next 3 months. I start work here at 6:30 in the morning. I don't finish till 3 or 4 o'clock in the afternoon. Anybody that's a listener or a client of ours that is confused about what's happening in the financial markets at this point and would like some advice, maybe have me sit down with you and discuss where your money is at this point here and let you know how to conservatively be in the marketplace and strategically place yourself in certain investments that are going to protect you from losing your money, number one, and then give you income or to give you an opportunity to make money as all these situations are unfolding. So these are the most confusing, dangerous, volatile times that you will probably ever see. It's going to get worse. So please, if you're concerned about your money, give me a call. I'll be more than happy to sit down over the phone with you and discuss and help you place your money or actually, put yourself into a very conservative position to where if the banks are going under, the stock markets are plummeting, and all these scenarios are happening at one time, how you can avoid losing all of your money. It's extremely important, and you don't have an awful lot of time to do this. Look what happened in Greece. The people that didn't believe that Greece was going to go under and didn't take the precautions are now basically wiped out. So, again, these are extremely difficult times. China's not in good shape. Europe's not in good shape. The fact is the economies all over the world are suspect and in trouble, but again, there are ways that we can protect ourselves and there are ways that we can make an awful lot of money from this. Please give me a call during the week, and I'll be happy to sit down for as long as it takes and help you decide where to make your investments and how to make things safe, because we need to get through these difficult times. Believe me, there's people that are a lot wealthier than us that are losing fortunes in the market right now. We don't want to be in that situation. It's way too difficult to make back. So, again, Randy, this is a volatile week. As we're taping the show, gold is trading at 1163. It's up 470 on the day. However, during the week we were down to 1145, which was support for gold. The next major level for support for gold is 11 and a quarter, and then 1100, and I'm pretty positive we're going to hit those numbers. Silver actually got scary this week. It was down as much as $1.50 in one day, and it got down to $14.50. As we're trading the show today, it's back up to about $15.46, but the low this morning was $14.99. There's a massive short position in the silver market of about 200 million ounces, which tells me that silver's probably going to $12.50 and probably gold is going to $1,000. Meanwhile, the oil market sold off $10 this week and got down to $50. Don't forget, it was at 62 just a couple weeks ago, and what that caused the Canadian dollar to do was to drop to about 72 cents. So the way I see this is that as Europe gets into more and more difficulty, the price of oil will continue to fall and fall. Again, to see $35 oil again is certainly on my radar screen, which would push the Canadian dollar down substantially. So you've got to make some moves. It would be a smart idea to get some money into the American dollar, and I can help you do that. We have programs that will pay you 24% a year in U.S. dollars. If that's of interest to you, give me a call, and I'll show you how you can make a lot of money in American money at a time when things are extremely difficult and volatile. So, again, Randy, that's the way I see things in the market right now. It's very, very frightening to think that what China is doing with their stock market, which is so illegal, but I'm positive on Thursday they went into the market and bought back stocks, and that's the reason that the Chinese market went back up.
Speak with Harold, 1-800-432-1022. Harold will take the muddled and unmuddle it for you financially. The Diamond telephone number, 1-800-432-1022. Harold's website, rarecoloreddiamonds.com. Featured diamond of the week is a .76 carat hard-cut, fancy, intense pink argyle. Speak to Harold about investing in that diamond. We'll talk about the argyle pink tender as the show goes along. To give you an idea of what happens in a financial crisis, you have a situation in Greece where the banks, and this is according to Fitch, have failed, and they're in restricted default. A lot of the people that took out loans from those banks have stopped paying. So what you're going to find is a scenario where if the Eurozone allows Greece to continue on in the Euro, there may be a bailout package, but banks are going to have to be recapitalized. And as well, there is going to be probably some haircuts taken. We saw it in Cyprus. It's called a bail-in. And Greek banks are preparing a contingency plan for a possible bail-in of depositors amid fears the country is headed for financial collapse. Bankers and business people with knowledge of the measures said during the week. The plans, which call for a haircut of at least 30% on deposits over $8,000, sketch out an increasingly likely scenario for at least one bank. A Greek bail-in would resemble the rescue plan agreed by Cyprus in 2013, when customers' funds were seized to shore up the banks, with a haircut imposed on uninsured depositors over $100,000. It would be implemented as part of a recapitalization of Greek banks that would be agreed with the country's creditors and the European Commission, IMF, and ECB. It's the haircut that would take place in the context of an overall restructuring of the banking sector once Greece is back in a bailout program, and one person following the issue. This is not something that's going to happen immediately. With few deposits over $100,000 left in the banks after 6 months of capital flight, it makes sense for the banks to consider imposing a haircut on small depositors as part of a recapitalization. It could even be flagged as a one-off tax, said one analyst. So here you have a scenario where the banks are insolvent. We know that, and in fact, their money has been cut off by the ECB. So you have that scenario, and they're already looking at, and we've talked about this before on past shows, what happened in Cyprus. They're talking about a bail-in for Greece. And Harold, with about a minute left, this is why we advocate having hard assets in your possession, in your control, because you may be in a position where suddenly you lose 1/3 of your money, maybe even more. And, if you have some diamonds, gold, silver, hard assets in your possession, it's obviously a little easier to get by in a bailout scenario.
Well, that's very, very true. In actual fact, if the good people of Greece had assets like diamonds, they wouldn't be in the position that they're in right now, because the fact is they could have just taken these diamonds and sold them at whatever price. The fact is they wouldn't be 2 weeks without their money, and they wouldn't be in the situation that they're in right now. So again, we want to be proactive. We want to make certain that we're in a good position when the markets start to wreak havoc. And again, we just don't want to go through that again. We remember 1999 and we remember 2008. Why do we keep on putting ourselves back into similar situations again? This is vital. We have to have a game plan, and we have to know what we're doing moving forward, because these are very dangerous times.
We're going to come back and talk about diamonds as the World Financial Report on Radio with Harold Siegel and me, Randy Marshall, continues right after this. Welcome back to the World Financial Report on Radio with Harold Siegel. My name is Randy Marshall. Joining us via the telephone, our financial and diamond expert, Harold Siegel. We're taping our show on July the 9th, 2015. Our time is 9:08 Mountain. Our radio show runs 6:30 CHED in Edmonton, Sunday afternoon at 3. The shows are archived on Harold's two websites, HESradio.com, rarecoloreddiamonds.com. You can listen to them anytime you want. They're streaming there. We have a podcast through iTunes. Type in The World Financial Report on Radio. You'll find us on your portable device, going anywhere you do if you choose. Connect with Harold at rarecoloreddiamonds.com. In the first half of the show, a very generous offer. He's willing to talk to anybody about their financial situation and help guide you through the financial times that we live in, which are very confusing. Connect with Harold at rarecoloreddiamonds.com or call 1-800-432-1022. Our featured diamond of the week from rarecoloreddiamonds.com. Click on featured diamond of the week. You'll see it. It's a .76 carat, hard-cut, fancy, intense pink argyle. And Harold, this is the rarest of the rare, a museum-type piece, just a stunning diamond to invest in.
Oh, you bet it is, and the size of it is amazing. It's a .76, where 95% of the Argyle pink diamonds are under a quarter carat. So when the Argyle tender happens, which is happening now, they're starting to show it, and it actually happens in October, or ends in October. The fact is that there's only 44 carats of diamonds from the Argyle tender. What they do is they take 55 to 65 of their best diamonds, over a half a carat, and they take them on tour to 6 different cities around the world, including China this year, New York, Perth, all those areas. And us high-end dealers get to view these diamonds in person and then make one bid per diamond that we're interested in. It's a closed bid. So we won't find out till after October if we want any of these diamonds or not. Now, in my career, I've actually been fortunate to have obtained several of these Argyle tender diamonds over the years. Last year was the first year that I didn't get to buy any. The prices were so high that I wasn't even close on my bids, and that was surprising because I can generally tell what the market prices of these diamonds are. I've been in it for such a long time. However, with the general public getting involved and everybody knowing that the mine is going to close in 5 years or less, the fact is they bid these diamonds up substantially, and last year every diamond sold at record prices. Over 40% of them were I1 clarity, meaning it's a lower clarity where you could possibly see the inclusions with your visible eye, and that didn't even stop these diamonds. They went up substantially. It's just the idea of owning one of these treasures, and that will be no longer, because the Argyle mine actually produces 95% of the pink diamonds in the world and red diamonds, which are extremely rare, and soon this mine is going to close. The closer we get to these mines closing, the more and more these diamonds go up. So when the Argyle mine holds their Argyle tender, which is the major diamond event of the year, they display these magnificent diamonds over half a carat. The one we're showing this week as a featured diamond is a 3/4 carat, heart-shaped, fancy intense pink Argyle, one of the best Argyle diamonds you could ever possibly buy. To give you an indication as to how these diamonds do, back in 2003, when there was a couple large diamonds available, I bought a 2-carat, fancy, vivid, purplish pink Argyle from the tender. It was the largest diamond in the tender. Vivid is the best clarity. It's got the highest saturation. At that point, I paid a lot of money for the diamond. I paid about $350,000 for it. Now, it's 2015, so it's 12 years later. That diamond is worth in the range of about $4 million. $3.5 to $4 million. As the mine gets closer and closer to closing, I anticipate that eventually this diamond will be anywhere from a $5 to $10 million diamond the longer that I hold it. And if you don't think that that's possible, I've talked about this many times on the show, but my wife's girlfriend inherited a 5-carat pink from her grandmother. Her grandmother bought it 50 years ago for $50,000, and today that diamond is worth $5 million. The longer you hold on to these diamonds, the more and more they go up in value. But you need to buy rarity, and you need to buy strong color and clarity and all that type of thing. And the fact is that the longer you hold on to a diamond like this, the more and more it goes up. And now that we know that the Argyle mine is going to close, that these diamonds are the best investments. They're better than any stock you could buy, any bond, any paper asset. The only assets that compare to rare diamonds are classic cars. Both are going up substantially in price, and again, they never ever decline. There are so few diamonds available to come out of the Argyle mine. This Argyle tender is only 44.15 carats. And 3 of those diamonds this year are going to be red. Red is the rarest of all diamonds. Very seldom will you ever see or hear about a red diamond except when the Argyle tender is coming up. And these are all named diamonds. These are magnificent pieces that will make our clients a fortune of money. Now, again, diamonds are not for everybody, just like a lot of investments aren't for everybody. You know, the fact is that to get involved in the rare diamond market, the minimum investment is $15,000 to $20,000, and then we have diamonds that go up as much as to $40 to $50 million. Now, most of our clients do not partake in those expensive diamonds. Most of my clients are hardworking, everyday people that just want a fair shake. They want to buy an asset that they're not going to lose their money on. They're sick and tired of the stock markets and the bond markets and the paper assets and everything that's manipulated. And in these confusing and very dangerous investment times, diamonds like this featured diamond is something that will make you a ton of money. So the fact is that put your money into an asset that you could put away privately, that nobody knows that you own. And if, God forbid, the currency markets continue to trade like they do, this is the best asset to sell because it could be sold in any currency, not just U.S. or Canadian dollars. So the fact is that this featured diamond is one of the best diamonds that you could ever buy, and one lucky investor will get this. It's also a heart shape, which is one of the rarest cuts. Other diamonds that are less expensive but will do extremely well are yellow flawless diamonds from South Africa. They start in and around the 20,000 level and go up from there. But these diamonds increase by 15% a year. 15% a year no matter what. Back in 1980, you could have bought a 1-carat fancy yellow internally flawless diamond for about $500. Today they're around $20,000. Put these diamonds away long term. Don't buy them and sell them in 3, 4, 5 years. You're not going to make a lot of money. Put them away for your future. And when you're getting ready to retire, they're better than any stock that you could buy. You'll make much more money on a diamond than you will on buying stocks. The other thing is that with these rare diamonds, I put them away from my grandchildren. So in the next 20 or 30 years, when they're ready to really make their mark on the world, they're going to have something that's valuable, something that they're going to be able to turn into cash and invest in something else. So the fact is that the rare colored diamond market is the strongest market to be in at this particular point because it's affected more by supply and demand than it is by outside sources. And when you look at the Argyle mine, it's the epitome of supply and demand because the demand for these diamonds are the highest that they've ever been and the supplies are the lowest that they've ever been, and that's a recipe for substantially higher prices. We're very heavily recommending yellow flawlesses, either the fancy yellows, the fancy intense yellows, and the fancy vivid yellows. The fancy vivid yellows have got the highest saturation of color and are the most expensive of the yellow diamonds. But consequently, they go up more than any other yellow diamond too. So you want to look at those. They're very, very difficult to get right now, and you only want to buy yellow diamonds that are internally flawless, and that's all that we carry. They're very rare in the sense that maybe there's 70 to 100 yellow flawless diamonds that are cut in a year. That's it for the entire globe. So the fact is I sell probably that much myself. It's a tiny little market that could be affected by any interruption in production or whatever. For example, if they produce 100 carats of yellow flawless diamonds a year, I could actually turn that into a necklace, and that would take care of the entire year's supply of yellow flawless diamonds. What would you think would happen next year when none of those diamonds are available for sale? The prices go up substantially. The biggest payday will be in Argyle pinks. We will never have another opportunity to revisit a mine that produces 95% of any colored diamond, and the pinks are the most mysterious of all. Pink diamonds from the Argyle mine are the most sought-after diamonds in the world at this point, and with the Argyle tender going on, it's much more reinforced. They start at about 50,000 and go up from there. So again, that knocks out quite a few investors because 50,000 is not in everybody's ballpark. But the fact is that if you got money sitting in stocks or bonds and it's not making you any money, take that money out of there. You're going to lose it anyways. There's no way that the stock markets are going to stay up. Not with everything happening in China, Greece, and Europe, and everywhere else. You need to get into an asset that is portable, that is private, that is not traded on exchanges like stocks or commodities where it can be manipulated. It's the best asset you could own in the most troubling times, and I'm very, very heavily recommending that you get into the rare colored diamond market at this time.
Speak with Harold, rarecoloreddiamonds.com, rarecoloreddiamonds.com, featured diamond, a .76 carat, hard cut, fancy, intense pink Argyle. Now, the Argyle tender was announced last week, and they say red stones bring added luster to Rio Tinto's annual diamond tender. Super rare red diamonds, prized by collectors in glitterati, are set to steal the limelight at Rio Tinto's annual tender of its best colored diamonds. Only a handful of the tens of millions of carats produced at Rio's Argyle mine in the Kimberley are reds. And Mother Nature has been kind this year. Each one is about 1.6 billion years old. The color and clarity this year is exceptional, says Rio Tinto Diamonds and Minerals Chief Executive Alan Davies. The fancy reds are just a fluke of nature. It's the extra pressure and the extra heat that generates them. With names inspired by the world of ballet, the top pick Hero Diamonds in this year's tender includes 3 reds. In the top billed Argyle Prima is a 1.20 carat fancy-shaped fancy red. It's said to combine qualities of size, shape, and color and clarity, rarity seen even in the exclusive world of fancy-colored diamonds that people like Nicole Kidman, Barbra Streisand, and Jennifer Lopez, they're among the owners of Pink Diamonds. 90% of the pinks are produced at Argyle, where a $2 billion investment to take the operation underground is nearing completion. With no guarantees of the mine's future after 2020, buyers may only have a few more years to snap up the sought-after pinks and red stones. We're invested through 2020, and we're seeing what will happen after that, according to Mr. Davies. He said that at the preview of the Argyle tender at the Sydney Opera House about a week ago. The results of the annual sealed tender are always under wraps. Mr. Davies says the total value of the 64 stones in the 2015 offering comprise 44.1 carats. It involves lots of zeros, as he puts it. And it's interesting to note, Harold, there was a story from the Financial Times, and it was called Pink Diamonds Supply Dwindles. And they talked about the Argyle Pink Tender and how it's been in operation 30 years. But limited reserves are left, and colored stones are in high demand. The prices commanded by the gems it produces are expected to rise steeply. And pink diamonds from Argyle are among the world's most concentrated and portable forms of wealth. Josephine Johnson, she's the Argyle Pink Diamonds manager, called them 1 in a million because for every million carats of rough diamonds produced from the Argyle mine, only 1 polished diamond is offered for sale at tender. Recently, prices have consistently appreciated 10 to 15% a year. Between 2002 and 2010, the index price for diamonds from the Argyle Pink Diamonds tender increased 108%, while white diamonds went up by 22%. Harold, this is why we talk about the rarest of the rare, the museum piece type quality diamonds that you have on your website, rarecoloreddiamonds.com. We can't urge people enough. When you have an opportunity to get the featured diamond that we do today, you must take it. It's a .76 carat, hard-cut, fancy, intense pink Argyle. And at some point, when the mine does shut down, and we're looking at about 2020, you have a scenario where you could be holding in your hand one of the world's rarest diamonds. And at that point, we will have to see where prices go. But Harold, as we've talked about on the show, they will continue to grow conservatively 10 to 15%. But if 90% of the world's pinks are gone, I would say it could be substantially higher.
You're 100% right. We are starting to see on the vivid pinks that they're going up way more than that. We're starting to see them going up by 25, 30% a year. And again, we're only 4 years away from 4.5 years from the mine closing. These years are flying by. So again, while you can still get them at decent prices, start to buy your Argyles right now if you don't already own them. Now, many of my clients own these diamonds. And one of the things that you should understand is that when the Argyle tender goes on, most of the diamonds that are going to be sold at the Argyle tender are going to be bought by jewelers, very, very high-end jewelers that are going to take these magnificent pieces and they're going to put them into jewelry, and you're going to pay 3 to 4 times what they paid for these diamonds. So the fact is that we do the same thing. This 76-point heart-shaped, fancy, intense pink Argyle could easily have been in the tender. This has been a diamond of mine for quite a while now. We're putting it on the marketplace because There's very few diamonds like this for sale. We want one of our clients to own this diamond. This is a diamond that's in the very low six figures, but will be in the seven figures within the next 5 or 6 years. There's no other investment on earth that can give you the return of an Argyle pink diamond, and it's only going to be for a very short period of time because the mine is going to close. And don't think that there's a lot of diamonds. There's hardly any Argyle diamonds that come out of the mine that are considered investment quality, because a lot of the pinks that come out of the mine are minuscule. They're 0.005s or 0.00 or 0.01, so they're not big enough to be investment quality. You need, and most of the diamonds are under a quarter carat. A quarter carat is a small diamond, but in an Argyle pink, it's extremely valuable. They call it the most concentrated form of wealth on earth is an Argyle pink diamond. So you can imagine if most of them are under a quarter carat, you can imagine getting a 3/4 carat intense pink heart shape, what that's going to do to you financially. Whoever owns that diamond, it's going to be a seven-figure diamond down the road. Just put it away and forget about it and let that market go up in value. Now, we also can put these diamonds into museum quality pieces. You can enjoy the piece while it's going up in value, and it could be sold for a fortune on our auction when we're ready to sell it. So the fact is, an opportunity like the Argyle mine closing will never ever happen again in our lifetime. There is no mine in existence that does what the Argyle mine does, which is produce almost every pink diamond in the world. So the fact is, for those that own Argyle pink diamonds right now, congratulations, you've done something phenomenal for you and your family. For those that are sitting on the sidelines and are waiting to get involved, call us now. We just got our new supply of Argyle pinks in. We've got magnificent diamonds. We're keeping the prices as low as we possibly can so our clients can afford them. We want you to make the lion's share of the money. When we sell these diamonds for you, we're only going to take 10% of the profit. If you bought a diamond for $100,000 and in 10 or 15 years that diamond's worth $1 million, you're going to make $900,000. We're going to make 90, and you're going to make all of the rest. So again, we're in this together. The only way that my company is going to make money when our clients make money when they sell. So this is the most exciting times in the diamond market. If you're in a position to do so, if you've got money sitting in the stock market, you're going to lose that money. There is no doubt about it. Take it out, put it into a diamond, and you're going to find that the returns are going to be substantial. Also talk to me about other programs. I've got other programs that I can put you into that are involved in our mining business that pays 24% a year. You get paid every single month. It gives you a second paycheck. 24% a month is a ridiculous return, and I'm almost embarrassed to talk about it, but the fact is that it's such a profitable business that we've included our Canadian clients in it, and they're making a fortune. Our clients are making money every single month, and it's something that you should definitely look at if you're finding that an extra paycheck will certainly help you. A lot of my clients are retired, and they're very conservative. Putting your money in the bank and getting 1 or 2% a year just doesn't suffice, but you're making 2% a year with 2% a month with me, and that's going to put you into a very strong position. Give us a call. We're here to help. I understand the financial markets probably better than most people. I've been in it 35 years. I'm not afraid to make a prediction on the radio. I've done that for most of my career, and without bragging, a lot of those recommendations have come true. Especially a lot of the recommendations that we're making right now. I know they're not popular, gold going down, silver going down, oil going down, the Canadian dollar going down, but it's all going to play into the longer-term picture where we're going to make a fortune going forward. Please contact me next week. I'll spend as much time with you as you need to try to get you situated in a position to where we can not only withstand all the volatility and risk in the market, but I can put you into a position where you'll be very happy, you're going to make a lot of money, and you're going to have no problem sleeping at night.
We have a scenario where we're living in times, let's face it, countries are bankrupt. Banks are bankrupt. We're seeing it in Greece. And today, as we're taping the show on a Thursday, but it's a Sunday. The show is running on a Sunday, and we'll find out today exactly what will happen with Greece. Invest in hard assets. Now is the time to have an allocation of hard assets in your portfolio. Go to rarecoloreddiamonds.com. Take a look at our featured diamond of the week. Click on featured diamond of the week. You'll see video for a 0.76 carat, hard cut, fancy, intense pink Argyle. Just an absolutely stunning museum investment piece to start a diamond portfolio or to add to your diamond collection today. Greece could end up out of the Eurozone. What will that mean? I guess we'll have to find out. And we're quite concerned about the derivatives that are out there that are in the quadrillions. Has somebody written a bad contract on Greece? And as a result, we could really see a financial crisis develop as a result of derivatives. The banks are closed until Monday. A lot of them will have to be recapitalized, and more than likely it will be done through bail-ins. And we talked about that in the past on our show with Cyprus. The betting is probably pretty good that Greece will leave the Eurozone. Also, the Chinese stock market is just one massive Ponzi scheme. And people are realizing that, Harold, it's just not a one-way bet to the upside. And we had a lot of people, Chinese investors, getting heavily leveraged. And they saw when things went down, they didn't have the stomach for them to go down. They panicked and sold and lost a lot of money. And this is where hard assets come into play. The beauty of a pink diamond is, yes, we have a rough idea as how much it will appreciate on a yearly basis. But there isn't a stock ticker that goes by that tells you the price on a second-by-second basis, which I think is a good way to invest. You don't necessarily need to see moment by moment what your investment is worth. And all you need to know is you have something that has stood the test of time. Gold, silver, diamonds, hard assets have stood the test of time, and you need some of those in your portfolio today as a result of what's happening in the world financially and geopolitically. And Harold, we have about 3 minutes left in our show.
Well, I think you summed it up beautifully, Randy. Again, it's a very, very difficult time, and for most people, they just can't understand how Greece or China can affect, us here. But if you're trading, believe me, you're suspect to the same losses that everybody else is, and many of you, I'm sure, in your lifetime have experienced that you've been so bullish on something that you bought something and you took the risk of leveraging it, putting up a small amount of money to control a much larger amount of that product, and everything was going great while the market was going your way. But when it turns and the market falls and everybody panics and starts selling, that's when you can lose more money than you put into the market. That never, ever happens in diamonds. As I've always said, they don't trade on an exchange, so you can't get margin calls. You're not leveraging. You're paying for it in full, which is the way you should do with everything. Buy your gold in full, buy your silver in full, buy your diamonds in full, and don't leverage your stocks because you're going to get killed that way financially. So, again, Randy, these are troubling times. I've been through them before. I've been in the business 35 years. I'm extremely conservative. I'm not a big risk taker. So, again, if that's the way that you would like to trade your own portfolio, and I'm more than happy to sit down with you for as long as it takes and try to help you position yourself to avoid the risk, avoid losing your money, and put yourself in a position where you could do very well during these troubling times.
Bill Gross, bond fund manager, said Greece is in the eye of the hurricane. 70 to 80% possibility of Greece exiting from the euro. Gregory Manarino, think the United States is in good shape? The United States is in debt beyond the point of beyond. We are all going to be facing this issue here. This is a global problem that has no solution. There's no way you can continue to inflate the debt and the problem be fixed again. It is the mechanism of the system that is being called into question, and I believe we have to be close. Just look at the writing on the wall everywhere, and he's talking about what's happening in Greece. We know that Greece is bankrupt. Puerto Rico has announced that they are bankrupt. And I guess, Harold, as time goes on, we'll see if states like Illinois are bankrupt as well. We believe they are. So we've seen cities in the United States be bankrupt. It's a time where people need to be very cautious with the money that they have. That's why we advocate hard assets, investing in rare-colored diamonds. Speak personally and privately with Harold about investing in the rarest of the rare-colored diamonds at 1-800-432-1022. 1-800-432-1022. Harold, thank you for your knowledge, and it was a serious show today, but it had to be.
Well, love doing the show. I hope we opened up everyone's eyes to what the risks are. But again, with every risk, there could be a reward, and that's what we're here for, is to help our listeners and our clients get through these difficult times. Want to wish everybody a wonderful weekend and a very profitable day.
Connect with Harold at rarecoloreddiamonds.com or call 1-800-432-1022. That's it. Another edition of the World Financial Report on Radio with Harold Siegel and me, Randy Marshall. We will talk to you next week.